Good morning, Steve Free in Chicago with the morning grain comments. Grains are marginally lower. Calls overnight were lower. China announced that they will have the zero COVID policy. Some people think through 2023, and until 70% of the population is vaccinated. The question is, does their vaccination work? But that is offering some resistance to commodities. It's offer lower dollar and also higher equity markets. The Russian situation, Ukraine, again, conversations that the Russians want one of their big state banks to be allowed to no longer have sanctions so they could export grain and fertilizer. The UN may be pushing for this to help lower both prices globally and also help get information into the food into the countries that need it, especially like in Africa and things like that. This week we've got a lot of information that we have to digest. I think first of all is the midterm election and what happens and who controls Congress. We then have to see what is happening as far as the USDA report on November 9th. Intermittent in there, we'll have export inspections, export sales, ethanol data, and kind of work on just where market wants to be. It seems like corn is in the midpoint of a trading range. Strong cash domestic basis, ending of the U.S. harvest, dry conditions in Argentina offers some support, while the lower Ukraine prices, opening the corridor, and also looking down the road, maybe next year U.S. farmers will add acres and a trend yield will increase supply. All of that offers resistance. Bean market, some people think that we're at the upper end of a trading range in the Jan beans, and similar to Jan meal. Beans have been supported by higher soybean oil prices as capacity for B100 increases domestically. It's a alternative to diesel, which is trading at higher prices. We also note that a lot of uncertainty as far as China's soybean imports. Their October soybean imports was down. Their Jan export imports are down about 7%. So we'll have to see if that trend continues and offers resistance to the bean market. Wheat is wheat. Again, corridor probably has a lot of impact. Argentina is dry, their crop was lowered. Australia had some quality issues, still dry in the southern plains. Last week, first initial winter wheat crop ratings was record low for this time of the year. And offsetting that is that Russian wheat prices are still well below those of U.S., and U.S. exports continue to be slow. All in all, choppy trade this week. May see reduced volume, which adds to the volatility as we get through midterm elections, we get through all of U.S. export data and the USDA report. Have a good trading day, and remember, always treat people like you yourself would like to be treated.